Earnings and economic news combined to lift the markets higher last week as the third quarter earnings season began to ramp up. All 5 major markets climbed higher as the market experienced broad-based advances. The S&P 500 registered its third consecutive weekly gain as it traded within 1 point of its all-time high set back on July 26th. This week we'll see over 850 companies report third quarter earnings, of which 150 of those are in the S&P 500. Next week we'll then see the largest number of reports, with over 1,150 companies reporting. In economic news, existing home sales released on Tuesday missed expectations, falling 2.2% in September. Wednesday saw the release of the weekly mortgage applications, as well as the monthly FHFA house price index. The mortgage composite index dropped 11.9% week over week, while the FHFA house price index managed to close higher, but below expectations. This news weighed on the sector coming into Thursday's monthly new home sales report. In further mixed news, new home sales came in slightly above expectations. However, August's reading of 713,000 was revised downward to 706,000. This economic news caused real estate to register the worst performance among the S&P 500 sectors. Meanwhile, energy added over 4%, returning the segment back into positive territory for the year. Finally, in Brexit news, Boris Johnson was forced to accept the EU's offer of a January 31st, 2020 extension. This follows after the Commons voted to approve his deal, but not his timetable, last week. EU Council President Donald Tusk characterized this as a flextension, meaning that the UK could leave the EU sooner if a deal passed their parliament. Members of Parliament have proposed an early general election in December, with the hopes that yet another election would provide the voter support and members of Parliament necessary to finally make Brexit a reality.